Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
I'm short BPX, which means I'm bullish British pound.
Thank you. Bruce wants to know, with the trading volume not being as great as, let's say, an IBM or Google, what can you do? Well, Rob made the excellent point that, his view is that you're not going to trade today for tomorrow in FX options. More than likely, he said go out 60 days. I concur. I can't give you the exact time, but if you buy an option out 2 or 3 months or 4 or 5 months, and you pay an extra 10 cents, it's okay because, you're going to hold on to that for a long time. And if your forecast comes true, believe me, you'll be able to get out of this because the bid-ask spreads are very reasonable. You'll be able to get out at a huge profit if you're right. So I find that many investors that are new to the FX options, they like to trade the front month and they get in trouble. So that's just my own opinion.
Yeah, I never trade the front month. I probably should have mentioned that before. I never trade the front month. I never trade anything less than 60 days. I'd say an average is 90 to 120. But what that does is it gives everything plenty of time. It gives the spreads don't really make much of a difference. I'm not talking about I'm not making my money on a move of 10 or 20 cents or something like that. I'm making my money on significant. I'm interested in, with respect to options, I'm interested in the big moves. I'm interested in being a part of something big and not getting out of it quickly. And I'm interested in riding it and adding to a position, if I really think that it's significant. Maybe I wish I could add to a position in the front month, but listen, this is really about a longer-term time horizon, and the moves are excessive. And most of us here in this webinar aren't talking about trading, a $100 million position or a $1 billion position. We're talking about sizes and trades that are perfectly acceptable in the market that we're looking at. Absolutely.
Exactly right. If you had got the idea that the dollar is going to rally against the British pound or euro or even the Australian, one of my famous stories I read in the journal was that a Chinese bank lost $2 billion. You probably read this, Rob. They lost $2 billion, probably even $3 or $4 billion after it was all said and done, because they shorted the U.S. dollar against the Aussie at around the ISE FX option of strike price of 115. They naked sold the option, the call option, because they thought the U.S. dollar was just overvalued. That's not how Rob or I would recommend you trading these options. If you're going to do something naked, you want to buy the option. You don't want to sell it naked because you end up with tremendous risk. Wouldn't you agree, Rob?
It's unlimited risk. If you write an option, you sell an option to somebody else, you're going to expose yourself to an unlimited amount of catastrophe. And on the other hand, if you want to sort of play the market, so to speak, about a long-term viewpoint, I would trade a debit spread. I would trade a debit. I would buy something that could become valuable over time, rather than have something, a profit sitting in my account because somebody paid me for insurance and then they later on made a claim. I don't want anything to do with the business of providing insurance for other people.
Very good point. Very good point. So here, one more question. So just if you don't mind, so if you can confirm, if the BPX, U.S. dollar against the British pound, you'd be short BPX, correct? So you're thinking about buying puts at this point.
Yeah, that is exactly right, and that's what I think a lot of people don't understand when I talk to them about this, just on the street or in a seminar or whatever. If the BPX goes up, the British pound is actually going down. If the BPX goes down, the British pound is actually increasing in value in the world of currency trading. So I am short BPX, but that means I think the British pound is going up. And this webinar will be archived, and that I express that by saying, if you look at a chart of the spot Forex, you're going to be watching the spot Forex chart go up as the British pound increases in value. you're going to also simultaneously be looking at the BPX chart go down. And that's not really that big of a deal. That's just denominating everything in U.S. dollars that makes it a lot easier to trade the options in the first place.
Rob, I just want to say thank you. If you're right on this one as you were last year, watch out. We're going to weaken against the last time, Rob, as we said when we first started, I don't know, you came on in the winter and you thought the dollar was oversold. The dollar didn't go down anymore, but it didn't go up. But the next time you came on, you said, I'm not certain about anything, but I'm highly confident the dollar is going to rally. And you were right. You were right on. If anybody had put that to work, they would have done very, very well. So, guys, just remember, Rob doesn't know about the timing. He's not certain on when it's going to happen. Of course, the dollar could even rally a little bit more. You never know. But his view is that the dollar will probably sell off significantly against the British pound. Maybe he gave you a little bit of a tidbit, maybe against the Australian dollar also.
Yeah, we didn't get into that, but maybe we'll talk another time.
Yeah, will you come back, Rob?
Absolutely, you bet.
Rob, thanks so much. As always, you're great. We really appreciate the ISC and taking time out of your busy schedule to spend an hour and a half with us, whatever. Really appreciate it. Thanks so much.
You're welcome. And I just once again, everybody, if you have questions, you can visit me at robbooker.com. I'm here on behalf of Options University and the ISE today. You can find ISE at ISE.com. I really encourage you to go there and check things out, as well as I think it's OUForexTrader.com. And if you want the slides, I sent a link out. If you can't find them, you can't see them, I'll send the link out one more time all over again, and hopefully it's right there. Hopefully, if you want those slides, they're yours to have. Send them to all your friends. Use them at a cocktail party. Thanks, Steve. I really appreciate being here.
Thank you so much, and I'll be talking soon. Thanks again.
Okay. See you later. Bye.
Guys, I just want to remind everyone, January 27th, we have Price Headley with us, and Price gave us a great call on the Canadian dollar about 15, 16 months ago. Tony Hansen will be with us in early February, and again, she has given us her views in the markets. She's very, very knowledgeable, so join us with both Price and Tony in the next couple of weeks. Also, check out the ISE website, www.ise.com/FX for your FX options weekly outlook, FX option trading hours, webinars, articles that I've written, Steve Meisinger, the widget, all kinds of real cool stuff. It's all right there. And again, you can trade this product right through your equity options broker. So ask your broker about it. Continue to come to the webinars. I want to thank you. This is Steve Meisinger, your host. On behalf of the International Securities Exchange, have a safe trading day tomorrow, and I look forward to you coming back very, very soon. Take care, everybody.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.